We're going to dig a little deeper into the retirement crisis that I speak of, and we're going to talk about zombie companies. It's a phrase that has been used all the way back to the 1990s when the Japanese market failed in 1990. And there were a number of companies, and one in particular that you'll find if you look it up in Wikipedia as a department store that employed 45,000 people, but the Bank of Japan didn't want to force them into bankruptcy because they employed 45,000 people. So rather than force them into bankruptcy, they just kept lending them money and never asked for anything from them other than to pay the interest on the debt. And this became known as zombie corporations. It was recalled to use in 2008 here in the United States when the federal government lent money to banks and insurance companies and kept them afloat and really didn't ask for anything until they got back on their feet other than the interest. So it's got some history. What does that have to do with our current market? Well, there is so much capital flowing into the market, and it's at such a low interest rate that there are companies that are functioning much as the zombie companies of the past is. And it's even estimated that 14% of the S&P 1500 are zombie companies, and some of them are names you're going to recognize, such as Tesla, Netflix, Uber, Lyft, J.C. Penney's. These are all companies that are functioning. J.C. Penney's is pretty much a dead horse, but again, they employ 47,000 people, and so the banks have just continued to lend them money and not really ask them to pay back the principal just to keep them afloat and to keep these people working. And it's, as you might suspect, there is some political pressure for them to do that, and they are apparently paying their interest back. But let's talk about some of the other companies that I mentioned, such as Tesla. Tesla is, as you know, price doubled on Tesla in the last month. But the fact is that Tesla hasn't made any money. They've been in business for 15 years. And yeah, they are the leader in the electric car. But the reality is they aren't making any money, and all that anybody's doing is paying the interest on it. Now, there's people rushing to invest in it, and that's including some of your pension funds and some of your institutional investors and insurance companies. Remember, all of these people, particularly the pension funds, the insurance companies, they have monthly payments coming to them, and they got to invest it someplace. Tesla is $13 billion in debt. Now, to give you some relevance, they last year did $24 billion in sales. And on that $24 billion, they lost $665 million. And their interest payments were $685 million. Does that sound like a successful company? No, it doesn't. But then, of course, they think, and a lot of people think, they're the next Amazon. They're the next company that's going to explode. But the reality is they've got a lot of competition. I look at it from my point of view. Would I buy a Tesla? No. I can't get it serviced. The closest service is in Atlanta. That's 170 miles away. Would I drive a Tesla if I had one to Albuquerque, New Mexico? No, there's no dealerships that I can have it serviced in if I had a problem. So I believe in the electric car business. We're dealing with a zombie because the fact is, once the engineering is in place and 5G is there and it makes it viable, well, General Motors is going to get into it, Ford's going to get into it, BMW is going to get into it, and Tesla is going to have a tremendous amount of competition. So I'm not high on Tesla, but more importantly, you need to understand that these are companies that aren't making money. Netflix Netflix doesn't make any money. They've been in fact, their sales are down. And why is that? Well, everybody's getting into the streaming business. So we have an atmosphere where there is so much money coming to market, and the cost of cash, of money, is so cheap that we are keeping these companies alive. Lyft, Uber, they aren't making any money. Is it realistic to believe that all that Uber really has is a app on my phone and an organization, that if Google wanted to get into the car business, or if Amazon wanted to get into the car business, that they could put Uber and Lyft out of business immediately? Yeah. But again, there's so much money. The pension funds need to finance these companies because they are paying somewhere in the neighborhood of 5 to 6% interest, and that's better than a T-bill. And there's a need for that yield. So that's what's propping these companies up. The cheap money that's available in the world. Is it realistic to believe that these zombie companies are significant enough, big enough to bring the whole economy down? No, they are not. They are just a part of the many steps of the problem that we are having. The real issue, what I believe might turn the economy and create is the lack of liquidity. Now, what would cause a lack of liquidity? Certainly one element is there's more sellers than there are buyers. When there are more sellers, the prices come down. But I think the real exposure is in this interest rate thing. Right now, we have a lot of people, for political and for financial reasons, who want to hold interest rates down. The current Fed rate is 1.5%. Last month, Donald Trump even made a statement that he would like to see the Fed bring it down to negative interest rates. And I'm going to do a video next week on negative interest rates, why they exist, how they can exist, and what's probably going to happen relative to negative interest rates. But the fact is, as long as interest rates are low, we have cheap money. And as long as we have cheap money, there's going to be a rush to try to find yield. And the problem is, in finding this yield, you're pushing companies into stratospheres of valuation that haven't been seen in years. In fact, you're actually inviting corporations to borrow money. The corporate debt is up 50% higher than it was before the subprime crisis. We're finding that, again, to create this yield, we're finding that credit default swaps are coming back. And what's happening is they're not involved in real estate so much. Well, their mortgages are in the instruments, but you might have credit card debt in there. You'll have student loan debt. You'll have some of these loans that are going to people like Uber and Lyft and some of these smaller zombie companies, so that it is a package of debt that is, and corporate debt, and that is giving you a better yield than you can get yield on any one of them individually. So again, what that does is you mix quality debt with subprime debt, and we're right back where we were. Now the bankers and the brokers will tell you, no, that can't happen again because the banking system has cleaned up on the mortgages. Well, that's true. But when you've got companies like, and again, I'm not saying Tesla's going to go down, but when you've got companies like Tesla who had losses of $665 million last year, and their interest payments were $685 million. where you had Netflix, who had losses of $380 million last year, and their interest payments were $541 million, up 67% from the prior year. This isn't the way it's supposed to work. And again, these are notable companies. And there are in the S&P 1500, there are 210 of them. I just read this morning's Wall Street Journal that Pier 1 has filed for bankruptcy. I think the line is forming. And again, these are companies. Pier 1 was a zombie company. It was borrowing money to stay afloat. And finally they said, we can't go any further. So that's what a zombie company is. Dates back to Japan. If you like this video, give me a thumbs up, and by all means subscribe. And again, I want to plug one more time. No, it will be many more times. I'm in a race against time. I'm trying to get 1 million subscribers, and I'm racing to try to get it done by September 2021. So what I need you to do is subscribe, and then get everybody and anybody you love to subscribe so that they understand what's happening in our economy, and it'll be kind of your gift to them. So thank you very much, and I'm going to get back to you next week on zero interest rates or negative interest rates that banks will probably, or at least Donald Trump has asked them to go to.